Well, hello everybody. And when I say everybody, I mean like 10 people. People are trickling in right now. Um, but thanks so much for joining us today. My name's Luke, obviously Luke Robinson, and I am a member relationship manager here at Collective. And today, of course, we have an exciting webinar over everyone's favorite topic, federal income taxes. Everyone loves it. Um, but hopefully this can be a pretty enlightening session for you today. And kind of as we wait for people to trickle in, I'm going to ask you to do something. If you don't mind, in the chat box, tell us where you're from. Where in the country you're from. Maybe you're out of the country, and we'd like to know just kind of as we wait for more people to trickle in. Arizona, okay. Well, I'm telling you, people from Arizona are eh, they're strong. They're strong-willed people because I visited Phoenix this summer and it was hot. I thought I was on the surface of the sun. It was gorgeous, but it was hot. So kudos to you. All right, we got some Florida. Okay, that's where I'm from. Orange County, California. That's great. Arizona also. So we have two heat. And Virginia. That's also a beautiful state. Okay, well, people are telling us where they're from. Let's go through just Lisa. Okay, well, I gotta stop. Lisa's from Tampa. I'm from Sarasota, Lisa. So I'm just next door to you. Um, but before we start, let's go through just a couple housekeeping rules. For one, this recording of this webinar will be sent to you within 24 hours. So if you have to jump off early, if you're not able to catch the whole thing, just rest assured that we'll get you a recording. For any sort of technical problems like sound, connectivity, or if things are happening, throw those in the chat box for us for anything that happens like that throughout the webinar. But for questions, which we will have a Q&A session. Sorry, I started a little early here. We'll have an AMA session at the end, and you can ask me as many questions as you'd like to. So for those questions, if you don't mind, put that as opposed to the chat box, put those in the Q&A box, just so we can keep them organized and I know what to answer. And then he asked how long this will be. This will probably be around an hour, I would say, maybe a little bit less, maybe a little bit more. Um, but that's the gist. And I think that we might have enough people to go ahead and get started. Check. Yep, I think it's okay. I think we can go ahead and get started. Well, like I said, it's nice to see all of you. Thanks so much for joining. And today, oh, well, I'm being called an expert. We have an AMA with an S Corp expert. Learn the tax saving power of S Corps. And I mean, really, just to kind of talk about Collective a little bit, the reason that I probably know so much about S Corps is because I've worked for Collective for a few years now. Great company. I've learned a lot. I've seen what we do for our members. So hopefully by the end of this webinar, maybe Collective would interest you, and you might be interested in scheduling a call and learning more. But with that being said, let's talk about the agenda. For one, we'll talk a little bit about Collective, how we work, what you can expect. We'll talk about the basics of being self-employed. How does taxes work when you have your own business or you're self-employed? What's an S Corp? Kind of the question of the hour, right? It's how do they work? What is it? And then at the end, we'll have an AMA session. Drew can ask me anything. Okay, this is important to note. This webinar is just information. It's for educational purposes. Don't think of this as actual legal advice. Don't think of this as tax advice. It's not. The tax code is extremely complex, and some of these things might not apply to your situation. So it's a good idea to consult a professional, before you actually take any action on this information. About us, about Collective. We're the first all-in-one financial platform designed for self-employed people. When it comes to an S Corp, we pretty much do the whole shebang. Here's your money when you're self-employed. It is all over the place. There's so many elements to consider when you're self-employed. One, you've got to set up your business. How the heck do I do that? Do I set up an LLC? Do I set up a corporation? How do I form these things? What sort of documents do I need to go along with them? All that kind of stuff. Now you'll need to keep up with financial reports, probably on a monthly basis, accounting for your income and expenses, your equity, things like that. Now you have to figure out how much taxes you owe. When you were a W-2 employee just working for somebody else, that those money that was already done for you. Your taxes were being taken out of your paycheck as you get paid. But when you're self-employed, you're the employer. So it's your responsibility to pay taxes over with the government. With an S Corp, you have to figure out how to do payroll. Who the heck knows how to do that? Retirement, your opportunity for retirement really, or retirement savings really increase when you become self-employed. So it's kind of all over the place. When you need to make a financial decision, it's equally all over the place because all these things typically have something to do with whatever financial decision you're trying to make. And taxes just they have to do with so many things. They relate to so many different things. This is your money at Collective. One nice, big, organized straight line. And essentially, we put all of these things into one company so you don't have to have multiple subscriptions or multiple professionals or a CPA here, a bookkeeper here, a tax advisor there, a financial advisor there. With Collective, we try to consolidate a lot of that stuff. Okay, now let's talk about the basics of being self-employed. Let's talk about the taxes that self-employed people pay. First of all, there's the income tax. And this is what people think of generally when they hear the word taxes. The income tax typically comes to mind. And the income tax is based on marginal tax brackets. They're marginal rates. So it's not just one flat rate. So what that means is, let's say that you make around $100,000 or something like that. From $1 to $10,000 might be charged 12%. That might be a 12% tax rate. From $10,000 to $25,000, that chunk might be charged 14%, so on and so forth. That's how income taxes work. The self-employment tax, however, is different. It's a flat rate. It's a flat rate of 15.3%. And the self-employment tax, and I'm getting ready to blow your mind, so get ready. Literally what that is Social Security and Medicare taxes. It's what it is. So payroll taxes, self-employment taxes, Social Security, Medicare tax, they're all the same thing. And as an employee, this tax rate, this flat rate of 15.3%, as an employee, you only pay half of it. If you're working for somebody else as a W-2 employee, your employer pays half and you pay the other half. When you're self-employed, though, you pay both halves. There's no employer who exists to pay that other half for you. You're the employer and the employee, so you pay both halves. That right there is why self-employed taxes are so expensive. It's because you owe the maximum amount of tax in the Social Security Medicare tax. Because I'll speak with people a lot and they'll say, this is really strange because when I was a W-2 employee, making $100,000, I paid this much in tax. But then when I became self-employed the next year, made the exact same amount of money, around $100,000, my tax bill was thousands of dollars more. Why is that? This is why that is. It's because when you're self-employed and you don't do any sort of planning or adjustments, a huge chunk of your money is subject to the 15.3% Social Security Medicare tax. Okay, let's talk about how it works with a sole proprietorship or an LLC. what happens is you have your revenue, which is just the total money that you've made. Most of the time this is called gross profit, gross revenue, something gross. Then you subtract your tax deductions, which is simply just essentially just means your business expenses, expenses that can be written off, that give you your net income. That net income number is either positive, which means that you have a profit, of course, or it's negative, which means you have a loss, which means you've had more expenses than you've had an income. Either of those, whether it's a profit or a loss, will flow to your personal tax return on your Schedule C. And how it works is the profits are subject to the self-employment tax, the 15.3%. Excuse me. Just choked myself there for a second. But they're also subject to the income tax. So they're subject to both. It's a little bit of a double dip. What's an S Corp, however? And these rules work a little bit differently than just a sole proprietorship or an LLC. Before we get into S Corps, let's talk about legal structures. A legal structure is literally a business structure. So it's formed with the Secretary of State. So think about limited liability companies that you can set up, corporations that you can set up. Think about those things. And they require some sort of formal organization process with the state. You have to file an online form. Essentially what you're doing is you're filing your articles of organization for an LLC or your articles of corporation for a corporation. And then they're required to file annual reports, letting the state know if it's still running, who manages the entity, and so on and so forth. And some states require biannual reports, so you only have to do it every 2 years. Here where it gets a little bit tricky and where people have kind of a misrepresentation about what an S Corp actually is. An S Corp is not a business entity. It is not necessarily a corporation. A lot of people think that it is, which makes sense, right? Because literally the word corporation is in the term S Corp. But unfortunately, sometimes the IRS is not the best on terminology. They're not. And an S Corp is a tax election. It's a way to ask the government to tax your business entity in a certain way. So essentially what that means is both an LLC and a corporation, both of them can file S Corp tax status. Both of them can be S Corps. One is an LLC filing under the S Corp tax rules. One is a corporation filing under the S Corp tax rules. But it doesn't necessarily mean that the S Corp is a corporation. It's not. It's a tax election. Here's how they work when you're in an S Corp. Here's how taxes work. You do not pay self-employment tax on the business profits any longer. That goes away. So theoretically, it should save you in the self-employment tax. What happens, though, is once that paperwork is filed, it kind of creates kind of like an employee-employer relationship between you and your own business. You literally become an employee of your own LLC when you make an S Corp election. That's how that works. And since you're an employee, now you'll pay yourself a salary. Your business will literally pay you a W-2 wage, just like you'd receive if you work for someone else as a W-2 employee. But the cool thing about S Corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary amount. The rest are business profits, and they just simply aren't subject to the tax anymore. And a question that I get immediately, and it's a really good one, is people will be like, okay, Luke, let's say, so since you're telling me that the self-employment tax is only subject to my salary amount, then why not just pay myself like $1 in salary, or pay myself any salary at all, or anything like that? And the reason that I tell them to do so is because if you don't, you might get audited, unfortunately. Because what the IRS says about the salary is that it has to be reasonable. It has to be a reasonable amount when looked at your business as a whole. So the thing is, the challenging part about that is there is no set standard for what make for reasonable compensation. It's essentially a facts and circumstance test. So it takes in consideration how many hours a week do you work in your business? Where in the country do you live? How many years of experience do you have? Just all those things are a good idea to keep in mind when you're coming up with a reasonable salary. But here at Collective, we can help you pick a number. You know, we can give a salary recommendation to kind of tell you, what we think would, be a reasonable one. So we've kind of already gone. This is just a recap of how taxes work as a sole proprietorship / LLC. This is how they work though with S Corps. You've got your S Corp revenue, your total revenue, just like you would at as a LLC or a sole proprietorship. But from that revenue, you now have two things that are being deducted from it. Your salary that you pay yourself is being deducted from this revenue. So technically, your salary is an expense for the S Corp, for the business itself. So your salary is an expense, and then also just your other expenses. All the rest of your other operational expenses along with that. Your salary are subject to payroll taxes, that 15.3% that I was talking about. This number has to be reasonable. It has to be a reasonable amount. If you pay yourself too low, the IRS could say, nope, you've not paid enough in Social Security and Medicare tax. You need to bump up your salary. But what happens is after the S Corp deducts your salary, after the S Corp deducts expenses, the S Corp itself will either have a profit or a loss. Either that profit or loss will flow over to the owner's tax return and be subject to income tax, is what happens. So the owner's profit, it's no longer subject to the 15.3% self-employment tax like it was. It's only subject to the income tax now. So, once you reach a certain income level, it could potentially save you quite a bit of money. And let's talk about how much money it could potentially save you. This is an example, kind of comparing a LLC and an S Corp, an LLC with an S Corp election. If you look over here, these two individuals or companies are making the same amount of money, $160,000. With a sole proprietorship or an LLC, you can't pay yourself any wages. There's no such thing as W-2 wages for an owner. So that full 160 grand is subject to the 15.3%, 24 grand's worth. So that hurts like a splinter, it's not good. The self-employment tax is expensive, and your pass-through profit is 160 grand, and then your taxable personal income is the same. An S Corp, though, it works a little bit differently. You're making the same amount of money, you're making 160K, but you're allowed to pay yourself a wage with an S Corp. And this person has determined that a $60,000 wage is reasonable for them in this situation. So now only that $60,000 is subject to the is subject to the self-employment tax. So the total self-employment tax drops from 24 grand to 9 grand, a $15,000 difference just by changing your tax election. And the leftover 100 grand still flows to you. It's still your money. You can still pay yourself this 100 grand via distributions. It's still yours. You still have access to it. But now that's no longer subject to the self-employment tax. And it is subject to the income tax, though. So keep that in mind. But if you can do, some pretty interesting math here, is the difference in tax is around 15,300. And since your pass-through profit is no longer subject to the 15.3% self-employment tax, $100,000 of your pass-through profit times 15.3% is 15,300. So it kind of works nicely together like a warm basket of bread. Okay, I kind of already mentioned this, but there's no set standard for reasonable compensation. It's up to you. It's a facts and circumstance test. So, but it's also important because if you're, unreasonable with it, or if an IRS auditor would deem that it's unreasonable, they could penalize you, reclassify some of your earnings as wages. And that's not fun because there's penalties involved, there's extra taxes involved. So the key, of course, is to strike a balance between how much it'll save you in taxes and IRS rules. But the good thing about collective, or another tax professional, is we can help you pick a number. We can help you with this. Which one is best for you? Like when you're thinking about LLCs, S Corps, all this kind of stuff. An LLC is best for those with new businesses with very little earnings. It's important to rope in with very little earnings because just simply being a new business doesn't necessarily mean that you shouldn't be an S Corp. If you're a new business and you're making good money right out of the gate, then you might want to be one. We give a suggestion, and this is just a general suggestion, that if you earn less than $60,000 in net income, in net profit per year, you probably want to stay in LLC. It's just not quite time yet for an S Corp. And the amount of money that it would take to administer the S Corp and to run it, and to frankly pay collective to run it, might not be enough to cover how much you save in taxes with the S Corp. So the amount that you pay to administer it might be more than what the S Corp is saving you overall. So why get yourself in a more complicated tax situation if it's not going to save you much money? So that's why we say that $60,000. And also people that just simply want a simple, straightforward tax structure. They don't want to mess with anything else. An S Corp is best for those, for one, who want to maximize their retirement savings. You can put a bunch of money back in retirement with an S Corp, potentially. Have a little bit more in $60,000 in net profit per year. But then also, it's usually a good idea to have enough cash flow to make regular payroll runs. It's best practice to run payroll throughout the year as opposed to just one big time at the end of the year or whatever. It's still possible to do it, but it's usually a good idea to have consistent cash flow and a consistent way to pay your monthly salary or however you do it. Okay, well, here at Collective, we handle the back office. So you can focus on actually working in your business, actually growing in your business. That's what you excel at. That is your strengths and your talent. That's what you should be spending your time on. We'll take care of the back office. For one, we will set up your S Corp. Of course, that's the first step. And what we will do is if you don't already have one set up, we'll start off by setting you up an LLC, drafting an operating agreement for you, and we will make the S Corp election with the Internal Revenue Service. We'll make it with the IRS. Then we'll also handle your monthly bookkeeping, this is on here twice. Apologies about that. Apparently, we're really excited about monthly bookkeeping, but we'll also handle that. We will finalize all your reports each month. We'll take care of that. We'll handle your payroll, of course. That's part of the membership. We'll calculate your quarterly tax estimates. Those are still a thing with an S Corp. And then you'll receive support from professionals as well, just throughout the year if you need it. And also, we will file your business and personal tax returns if you'd like. Well, let me back up. The business tax return is included in Collective's membership. Now that you're an S Corp, you have an S Corp tax return that needs to be filed, literally a business return. So that's included in the Collective subscription. If you would like your personal return filed, that would be an extra fee. Like I said earlier, we work with full-time solopreneurs making 60 grand plus and 99 profits. And usually with minimal W-2 income as well. Now, keep in mind, we still sign some people up that are a little bit below that 60 grand profit. Especially, let's say that people expect to make more in the future. or they're aware of the tax implications and they're comfortable with joining under that 60K, that's still possible. We work also with sole proprietorships, people that don't have anything set up. We work with LLCs or PLCs filing as an S Corp, and this is a professional limited liability company. Single member LLCs or PLLCs, and with people with self-employed profits of 60 grand or more. Here's the good news too. Collective costs a fraction of a CPA, a fraction. And not only that, collective costs around the same as what you would pay a monthly bookkeeper to only handle your books, to handle nothing else. 300 a month is usually a pretty reasonable cost for something like that. For just $50 more, for $349, we will handle everything else. And typically, in a situation like this, let's say that you went to a CPA or a tax attorney or someone like that, and they handled the whole shebang for an S Corp. I wouldn't be surprised if it was $7,000 a year. It's a lot more expensive, but collective is reasonable. It really is. And you've got a couple options. For one, you can go monthly, and that's $349 a month when you do that, or you can pay in full for an entire year, and we'll give you 15% off of that. So that kind of comes out to around $296 a month when you do that. So you save around $600 when you go the annual route. We do have a one-time onboarding fee of $199. And what this covers is setting up your business. Like, there's a lot of work that needs to be done kind of in the onboarding phase. So we'll use that to set the business up. We will use that to verify existing businesses that you have, maybe do some bookkeeping cleanup in certain situations. And then also, collective is tax deductible. So along with the savings that you're getting from the S Corp and the income tax savings that you're getting from writing us off, usually pays for itself pretty quickly, the membership. Okay, well, here we go. We have reached the Ask Me Anything section of the webinar. And also, too, it's important to point out, we've got a discount code that you can use if you just decide to schedule a call with us and talk through your situation. And Sarah, she's actually my colleague. She helps me run the webinars here. She just put that in the chat box. She just put a link that you can schedule a call in the chat box, and come to this call, speak to a new business advisor, talk about S Corps, talk about your finances, and kind of see if it would be worth it for you, and give them this code, and you'll get half off your first month. Okay, well, let's get started on the questions. All right. Is it possible to do quarterly the minimal salary payment, and at the end of the year for December to have a higher salary? Yes, that's technically possible. So let's say that you do a little bit smaller quarterly salary payments. Let's say that you do it in the first quarter, second quarter, and third quarter. You still have time to run another larger payroll before the end of the year. So sure, like, that's technically possible. You can do that. Now, best practices is to pay out a reasonable salary kind of consistently throughout the year and relatively consistent chunks. That is best practice, but it's still possible to run a big payroll at the end of the year. Oh, I'm a W-2 with 5 rentals, 6 syndication K-1s, and 6 1099 interest forms from banks. I will acquire an existing concrete business that is currently an S Corp. And I keep doing my 1040 and you guys do S Corps. Honestly, we mainly work with consultants and service-based businesses. To be frank with you, if you're buying a concrete business, that you'd probably want a CPA or someone that, I guess, specialize in a situation like that, because you've got a lot of stuff going on. Now, technically, it could still be possible for us or for the 1040 to be, you could keep doing your 1040, sure, but I would think you probably want another company do that as Corp. In a concrete business, there's a lot more elements. You probably have inventory. You probably have supplies, materials. Honestly, you might need a little bit more of a specialized professional to handle that. Are you also the registered agent for the LLC? And is that included in the monthly fee? Well, how it works is we provide registered agent services through a company that we partner with that technically provides the registered agent that is, listed as the registered agent for you. But yes, the good news for that though is there's no extra fee for that. That's included in the collective membership. Oh, Jerry has a good question. What's the time frame to get fully installed? Honestly, that kind of depends. If you're, oddly enough, if you come in just a sole proprietorship, like you don't have anything set up yet or anything, like you don't have an LLC set up yet or anything, it's actually easier for us to just set up everything ourselves. Someone like that probably will get through the onboarding process quicker than someone with an existing S Corp or an existing business. And the reason that is when someone comes in with existing stuff, we have to go back and verify it almost with a fine tooth comb and see the documentation, see if it's appropriate, see if everything's right. So that actually takes a little bit longer when you've already set up some businesses. But the time frame to come in if you have no business, I'd say maybe generally probably around 3 weeks. If you have an existing business, I'd say probably around a month to get the whole thing set up and the whole shebang. If I already, great question. If I already filed as an LLC, can I choose to file as an S Corp with the IRS? Yes, you can. Absolutely. And that's what we would do too here at Collective, is the first thing we'd do is form an LLC, and then we'd make an S Corp election on it. But if you've already formed the LLC, we can make an S Corp election on that very same LLC. If you already have an LLC for a sole proprietorship, do you need to get a new LLC for S corporation with the state? If so, is it part of your service? You don't need to get a new LLC. You can make an S corp election on your existing LLC, thankfully. How do you switch from an LLC to an S corp? You file a form with the federal government, and it's called Form 2553. And it's essentially an S corp election form. And what's important about that form is that you can't e-sign it. You have to physically sign it. So you got to print it out, sign it, and you can either mail it in to the IRS or you can fax it in to the IRS. And then after you do that, after a time, you'll receive a confirmation letter from the IRS letting you know whether they rejected or accepted your S corp election. I'm in New Hampshire and have been told by different accountants that LLC or S Corp has no real difference in tax consequences. That is not the case. Now, don't get me wrong, state by state, it might change it up a little bit because of complicated state tax rules and how they interact with an S Corp. So some states make S Corp more worth it and some states make S Corp less worth it. But to just make a blanket statement to say that there's no real difference between LLCs or S Corps is false. That is incorrect. There are a lot of situations that I've seen where someone is saving $10,000 or $20,000, sometimes even $30,000 because they're no longer an LLC or simply an LLC. So no, I would disagree with that statement. Do you have a pro bono program or a way to start me up and allow me to pay back? You'd be doing God's work. Unfortunately, it's just a monthly subscription. And the reason that is because these are serious matters. Like, when it comes to taxes and financial matters, we would like before we even get started, we would need you to sign, a terms of service and pay a monthly subscription. And but the thing is, though, let's say that you have a collective membership and things happen, you know, so like you can talk to your advisor at collective and we could discuss something about that. Does collective not employ CPAs? We do employ CPAs. Sure. There's a lot of professionals here that have a CPA designation. I have an Amazon store and an online affiliate marketing business. Would this be a good program for me? Sure, it very well could be. I would encourage you to schedule a call. Can you make any necessary LLC changes to my existing businesses? It kind of depends on what that would be, to be honest with you. So that would kind of be done on a case by case basis. Oh, here's a good question. Thanks for answering my question. To go further, if no new LLC is needed for the S Corp, do you need a new EIN for S Corp for my sole proprietorship's EIN? Ooh, good question. If you're a sole proprietorship and have an EIN, then yes, we'd have to get you another EIN when we formed your LLC and S Corp. But if you currently have an LLC with an EIN attached to that LLC, then we can use that same EIN for the S Corp. We won't even have to get you a new EIN. The only time that we need to get you an EIN is when you are a sole proprietorship without an LLC and you have an existing EIN. When we set up an LLC and make an S Corp election, we need to get you another one. Oh, Jerry, this is a good question. I'm an independent life and health insurance agent. Is this suitable for me? It depends. Because this kind of now we're talking about licensed professionals. And sometimes it kind of depends on your state and the licensing requirements in your state. Sometimes, and this has to do with insurance agents, real estate agents, just those kind of licensed professionals. There are some brokerages in certain states that won't even pay an LLC. They will only pay commissions directly to the person, like as an individual. They won't pay an LLC and they won't pay an S corp. And the reason that is just because of state compliance rules or whatnot. So honestly, Jerry, it depends on where you live, and it depends on whether the brokerages are paying an LLC, or they're only paying you personally. If they're paying an LLC, then we could probably make an S corp election on that. Sure. If they're paying you personally, we can't. You have to have an LLC in place to make an S corp election on it. Is an LLC included in my membership? Does that include state fees? Um, no, no, it doesn't. Now, we'll set up the LLC, but it doesn't include the state filing fee. We would charge that in when we form the LLC. And that's a good important thing to note is ongoing, there's no extra fees with collective, like to perform any services. But the only thing that the collective membership doesn't cover are fees to the government on your behalf. So LLC filing fees and things like that, those would still be to do that. Just ask the companies I represent. That you would need to do yourself. Like you would need to call your brokerages and check on the licensing with that. Like we don't really specialize in that. Okay. I think we've got some more questions in the chat box, so let me just go over there. Can the S corp be backdated? Unfortunately, with collective, it's too late in the year for us to backdate your S corp election. If you came on board as an LLC, we'd make your S corp election start on January 1st, 2025. Here's a good question from David. Why would the S corp application be rejected in most cases? Honestly, the most of the time where I've seen it rejected is just kind of silly stuff. Stuff like you fill out the form wrong, you put a different piece of information in the wrong spot, you electronically sign the form, you send it to the wrong place. Things like that could cause it to be rejected. But let's say also too, the S corp has certain requirements on it. So, for example, you can only have up to 100 owners who are permanent residents of the U.S. to be shareholders in an S corp. You can only have up to 100. So let's say that you have an existing LLC that has more than 100 owners, then that S Corp would likely be rejected because you can't do that. Okay, Lizzie has a question. I just opened I just opened a multi-member LLC manager owned. I own 95% as the manager, and the other 5% is owned by the secretary. Question is, when it is tax time, I am trying to ensure that my taxes aren't affected by the business taxes. I am refinancing my rental home and the business will have it under their name. So the equity will go into the business account. How will that affect me personally? Lizzie, I'm sorry. I'd love to answer that, but that's way too much for me to unpack in this forum. I would talk to a CPA or someone that specialized in things like that. I have a partner in my business. We share it 50-50. She is Canadian though. So would an S corp still work? Nope. Unfortunately, unless she's considered a permanent resident of the United States. So if that's the case, then you can have an S corp. But if she's not considered a permanent resident, then no, unfortunately. I'm a psychologist in private practice and paid via 1099 by the state of Texas. And I have a PLLC, a professional limited liability company. Can I apply for the S corp? Yes, you can. Right. No problem, Lizzie. Sorry I couldn't help you more. That's just a little bit more, complicated question. Natalie, it depends. She asked, could an S corp be right for Airbnb host? Well, it just kind of depends because the thing about it is rental income is a lot of times considered passive income, which is not subject to the self-employment tax at all. So usually for rental stuff, you wouldn't necessarily want an S corp because of that reason, since you're not paying self-employment tax anyway. But sometimes for Airbnb hosts and Airbnb rentals, the IRS considers that kind of stuff active income, which is subject to the self-employment tax. So it kind of depends on if your income is considered passive or active. If it's considered active, then sure, an S corp could potentially be right for an Airbnb host. Ooh, here's a good question. How many LLC setups are included in my membership? Just one. It'll just cover one business because each different LLC needs a different set of books. It needs a different S corp election, different payroll system. It's a completely new membership if you'd like to add another business. But sometimes all of your LLCs, they don't necessarily all need to be S corps though either. Can I fill out the 2553 and still have credit this year as an S corp? Yes, technically, you can put on the form as an effective date January 1st, 2024, but be very, very careful with that because just simply filing the form is not enough. With that, you have to figure out how much you need to run in payroll for the year. You now need to file an S corp tax return pretty quickly. So there's a lot of things that you need to do if you end up backdating an S corp election that long. Can you elaborate more about Airbnb businesses? Why is it useful to do S corps? Is it because of management? No, it has nothing to do with management. It simply has to do with how much money you're making in the business and if it's worth it. For an Airbnb host, though, it kind it kind of depends on how you're taxed as an Airbnb host. If you own property and the money you make from it is just passive rental income, you probably wouldn't want an S corp because you're not subject to the self-employment tax on that type of income. And a huge reason for an S corp is to save on the self-employment tax. So if you're not subject to the self-employment tax anyway, you wouldn't want to complicate your tax situation more um, by forming something you don't need. But if your income from your Airbnb hosting activities is considered active, then yes, an S corp might be in your best interest. Hi, I have an LLC for 1 year, but I have not made any money. How would I do my taxes if I have to file? Technically, you don't have to. So If you just have an LLC and it's made no money, it's made no positive profit, then technically you don't have to file taxes for the LLC. You don't have to include your LLC on your personal tax return. So you can just file a personal tax return and just say that you had zero income. Okay. I think we might have gotten through our questions here. I'll give it a few more seconds just to see if anyone else would like to ask any last minute questions. But I think we had a pretty good session, and the questions were excellent. You guys and gals are very smart. And well, oh look, we might have. I rent out my home and have an LLC as a therapist. Well, in terms of renting out your home, that probably wouldn't have much to do with an S corp, but as a therapist, it might. If you're making around that 60K mark or above it, then then sure, you might want to be an S corp. How do I contact your company? Well, Joseph and Sarah, if you don't mind, would you put here? I think I can share it. I can share. Allow. She already did it. If you click on that link, you can actually set up a Zoom conversation to speak to one of our advisors and to see if it would be best for you. I am also a W-2, so I will have to file my personal taxes only. That's correct. So when you go and you file your personal return, you'll include your W-2 information. But if you haven't made any profit in the LLC, you don't have to include the LLC information. No problem. Great question. Yes, to piggyback that, if I've made no money but spent money, can I file for a loss on the expenses? You can report a loss, yes. How much you can claim the loss for each tax year is a little different. Usually you can only claim a loss up to the amount that you've actually invested in your business. Um, but technically losses can still be made, yes. But like everything with taxes, it kind of depends. It can get pretty complicated. Is there a specific date to change from an LLC to an S corp? Honestly, just as soon as possible. The longer you wait, and if you backdate it, there's more cleanup work, like there's more compliance issues. So there's not really a specific date, but it's just important to do it as soon as you can if you're interested in it. Okay. Okay. I think we've answered all the questions. And I thoroughly enjoyed it, like I do every session. And please, like I said earlier, if you think that an S corp might make sense, if you think that collective might be in your best interest, schedule a call with us. You can do so via this QR code. We've sent you a link. Also, this information will come to you within 24 hours too. But you can go to our website, go to collective.com, and you can schedule an in-person consultation. And we will only sign you up if we believe in good faith that an S corp would benefit you. If it's not, if it doesn't benefit you, we'll tell you. We'll point you in the right direction. We'll give you some referrals. So no pressure. But thank you everyone for the kind words. Thank you, Natalie, David. I enjoyed it so much. Thank you, Megan. And we'll be here if you need us. I hope to see you around Collective.